the currency text is meaningless. So that would be a deal to say, hey, we're not fighting. It wouldn't really accomplish anything. Also on the table, though, is the December 15th inclusion of more Chinese goods under tariff, which is a much bigger deal. And if that were to be postponed, you would expect more from the Chinese side, for example, agriculture and energy purchases.
So you think it's meaningless, this sort of currency agreement that they might come to?
Yeah, we saw the text when Secretary Mnuchin first was talking about it, and he said it was the strongest ever. It doesn't do anything. It's a monitoring deal that allows the U.S. to act under certain conditions when we can already act ourselves under any condition we like. So it's basically the Chinese saying, we'll pretend that we'll allow you to retaliate against our currency policy, when if we actually did retaliate, they wouldn't put up with it.
Okay, Michelle, meanwhile, you have to think markets here are just saying, we don't really care if it's meaningless or not. We just don't want any more tariff hikes. We want this issue to be kicked down the road to as long into the future as possible.
It's clear to me that market participants are desperate for a deal. They very much want to see this kind of all go away, even if it's just detente or truce. What I think, however, is that even if there is some kind of truce, even if they come to some skinny deal, as we've talked about, the relationship with China is permanently changed. It's never going back to what it was. And by the way, their economy is slowing because of their self-inflicted wounds and all the presumptions that we had for years about what the Chinese economy was going to do and how it's going to grow. Those are gone. Everything is different now.
You know, Derek, that makes me wonder, which side of the bet would you take? Neil Ferguson's that China's GDP will never catch up with that of the U.S., or would you be on the other side of that?
Well, what GDP are we talking about? The ones the Chinese announce or their actual GDP? They're the ones that they announce, I think, will probably catch up. Of course, their population is 4 times ours. Will China ever get close to the U.S. in prosperity? Not under this leadership.
So if that's the case, markets here are saying, okay, you know what? So maybe this is a permanent change in the relationship. They're saying we don't necessarily care, right? They're more concerned about near-term cyclical worries. Okay, tariffs that could slow down the U.S. economy, tariffs that could hurt the Chinese economy and thereby hurt us too. If we're talking about a permanent change, in a way that's easier for markets to deal with, right? Because then they go, okay, well, I can figure out, you know, what does that look like in 10 or 15 years? It takes away the growth worry. Derek, go ahead.
I agree with Michelle that there's been a permanent change. I don't think that it's the case that it's 10, 15 years down the road that we face that change. I think we could face it in the election in 6 months. So I think it's likely that we'll get some sort of truce. They're working on it. But I don't think the truce will hold very long because let's say Elizabeth Warren is the Democratic nominee. She's going to come at the president for being soft on China, and that his instinct is to outflank everyone. So markets may be hoping for a truce. They're going to get a several-month truce, not a several-year truce.
What do you think, Michelle, the practical implications will be if it's a permanent change in the relationship?
Well, I think we're there already. You know, the obsession about trying to deal with their intellectual property theft, I've long thought that was going to be impossible to deal with. That's asking the Chinese to be different than what they are. And then even if there was some kind of agreement, it's individual companies that make the decision about whether or not they're going back into that country or whether they're willing to sacrifice what they've built here or elsewhere in the world and putting it at risk in China. Just because the president says, okay, we have a deal on intellectual property, doesn't mean that private sector individuals and companies believe it's going to be the case and believe it's actually going to be acted upon by the Chinese.
And then people are left trying to decide on a case-by-case basis, I guess.
Absolutely. Because that's always going to be the case, I think.
And there's companies who went into China with a very different, I guess, hope, you would say, for the outcome here. And what you're basically saying is that as it stands today, this idea of liberalization is not necessarily happening, but the idea that they're going to reach the world's biggest market still is, right?
So I am not convinced they're going to reach the world's biggest. I'm a firm believer in markets, and you know that, right? The free movement of labor, capital, and goods. And what I see under Xi Jinping is them going backwards on those issues. They never really got to the free movement of labor. People are still forced to live in certain parts of the country if the Chinese government says so. The free movement of capital has never happened there as well. I just don't think, and now they're going back to massive state intervention. They had started to undo that for 30 years, starting back in 1979. Now, under Xi Jinping, it's all about supporting state Chinese-owned enterprises, which are inefficient, waste people's money, and will hold back the Chinese economy.
Sounds like you'd be on Neil Ferguson's side of that bet. And maybe that means for U.S. companies, they shouldn't take for granted they're going to reach an expanding market.
I think that's an important point, and I think it's this underlying, when we're all very stressed about what should the NBA do, all of these companies made this, promise to go into China because it was going to grow so much. What if that's wrong?
Yeah, that's the question we're going to leave it on.
Yeah.
Guys, thank you both. Michelle Crusoe Cabrera and Derek Scissors, really appreciate it today. Just how sensitive are the markets to these trade talks and issues we're discussing? We'll take a look at this chart. Yesterday, as soon as the market closed, conflicting headlines on the trade deal sent S&P futures on a wild ride. It triggered 4 1% or more swings in the span of 3 hours. Today, the S&P was essentially treading water before jumping on that positive trade tweet that we told you about from the president, which references his meeting tomorrow. So should investors just move to the sidelines while this all plays out? Joining me for more on that now are Nancy Tangler, Chief Investment Strategist at Butcher Joseph Asset Management, and Wayne Reisner is President of Correa Asset Management. Today, CNBC unveiled the inaugural Financial Advisor 100 list, and Correa, Wayne's firm, coming in at number 14 on our list of top firms. So congratulations on that, and welcome.
Thank you very much.
And it's great to have you both here. Nancy, fascinating discussion with Derek and Michelle there just now. Tell me as an investor what you're going to do about this.
Yeah, I mean, you're going to rethink the model, I think, from here. But I also, we're not investing short term on China tweets or trade innuendo.
But is it harder if you're investing in the long term? Because what now are you trying to factor in for those China numbers?
Yeah, I mean, I think we're going to see supply chains move slowly over time. I think there's going to be sort of change at a glacial speed, but I do think it changes the framework. I agree with Michelle. I think she's been right on this issue all the way through. It is, our relationship is changed with China, and I actually think that's a good thing.
Well, in terms of the U.S. interest, but there's so many different mega companies, Wayne, obviously, like anybody you look at and have to figure out, well, what's their exposure going to be in China? How big a presence are they going to have there? How do you make that calculation now?
We're setting our parameters lower on earnings, and if we still like the company based on cash flow and those earnings, then we're comfortable going for the longer term. But the way earnings are going to come in right now, down this quarter, and I'm concerned a couple of companies that reported already today, Delta, Philips Electronics, guided lower. And so we're going to set our sights a little bit lower on earnings, but we could still like companies.
Sure. And do you use those opportunities and say, okay,
absolutely.
This is going to be a near-term pullback? I mean, how bearish are you about the U.S. economy at this point?
We don't expect a recession or a bear market, severe bear market, but we're definitely cautious here because, as I said, we have valuations that are high because of low interest rates, and we have a slowing economy, and we have corporate earnings, which I'm very concerned about, as I said, based on the reports I'm getting from companies and the companies we talk to.
What's the main thing you're hearing from clients? Are they nervous about being in the stocks? Are they nervous about being in bonds? Are they feeling just fine? I mean,
I have a lot of high net worth clients, and they're very circumspect. I think, this cycle, for the market to be where it is, normally they're getting more speculative juices going at this stage and looking at IPOs and what do you think of this? What do you think of that? We're not seeing that. They're very comfortable having cash reserves. So I'd say our short-term investments, cash reserves are pretty high.
Wow, okay. They're restraining, Nancy. That, again, I wonder feeds into this idea that this whole cycle can be longer and, yes, slower than previous ones. And the IPO point is really interesting. We've seen a lot of the kind of heat come out of there, but it's not to say it's over. Next year could bring Airbnb and a host of other companies. How, boil it down, how do you position?
Well, so we buy companies on a relative valuation basis, and we're also looking at the dividend, Kelly, because managements of these companies set the dividend based on free cash flow or normal sustainable earnings power as a portion of. So I'm less concerned about earnings. We're watching the top line. And we are finding attractive valuations in cyclicals. And so when I was here last, I was talking about software. Before that, it was consumer discretionary. We've been trimming back the consumer discretionary and moving more into tech and some of the more cyclical names. It's a bit contrarian.
But it absolutely is on the cyclical piece of it. But you're comfortable with the fundamentals there?
Yeah, we are. I mean, I think a lot of it's already priced in. I mean, you've even got 3M up today.
Wow.
It's been a long time.
That's a good point. Guys, thank you. But was Phil your dad, by the way? Phil Correa?
No. He was the founder of the firm, legendary investor.
Oh, you're not a Correa. You're just a Reisner.
I'm president of Correa, yes.
Well, it looks like he had quite the career. One of the first mutual fund guys, too.
Maybe I should have been.
Yeah. like a son to him, I'm sure. Guys, thank you both. Good to see you today. Thanks for joining me, Wayne Reisner and Nancy Tengler. And you can see the whole CNBC FA100 list and much more at cnbc.com/FA-100. And here's what else is still ahead today on the exchange.
Coming up, Apple gets caught up in the corporate battle between China and American companies. How far are they willing to go to appease the country? And will it come back to hurt them? Plus, digital media consolidation is picking up massive valuations. We'll tell you who the big winner is from this M&A bonanza and how you can profit. And a look at the CEO that investors think is worthy of a 20% rally. This is The Exchange on CNBC.
This is in Mexico. Carl's all change casserole.
So, Chloe walks in from school, tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want movies, I've got blockbusters. Football, how about the Premier League? Or how about crime dramas? I've got loads, and they're never going to guess who did it. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto renew, terms apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Comedy, coming up, way better than the dad jokes in this house. Or how about reality TV? I can fill that island-shaped hole. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto renew, terms apply.
Be honest, how much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention. Because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models ordered by 30th of September 2019 at participating retailers, subject to availability. UK residents aged 18 plus. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Welcome back to The Exchange. Apple's business in China raising some eyebrows after the company complied with a number of the government's requests. Apple removed a crowdsourced map service allowing Hong Kong protesters to track police activity. It also dropped the Quartz News app from its store after Chinese authorities said it violated local law. Its newest iPhone software omits the Taiwanese flag from its list of emojis now. Is Apple going to be the next target of the China backlash? I'm joined by Trip Mickle from the Wall Street Journal and Ed Lee, who is corporate media reporter for the New York Times and a CNBC contributor. You know, Ed, it does strike me that if I have to ask the question, then maybe they're not going to be targeted. Do we all just love our iPhones too much to really get too umbraged at Apple and their behavior in China?
Anything that Apple does, you know, we're going to, even the smallest things or the biggest things. I think the context here, though, is that Apple, for pretty much ever, has always complied with Beijing's requests or their demands, whichever way you want to put it. We talked about what's been happening right now, but a few years ago, Apple took down the Skype app from its app store for Chinese users. Not too long ago, there was an issue with the Apple Watch where they had to suspend sales in China because the Beijing couldn't quite sort of track the users using whatever kind of cell service that was embedded into the system. Of course, they fixed it later. The point is that this is in that context is consistent with what they've done in the past. Of course, the protests in Hong Kong, that sort of put a different lens on everything, where you're sort of pitting one consumer group versus another consumer group. That's what we saw with the NBA, and that's what we're sort of seeing here.
Right, and Tripp, that's why we're asking the question, obviously, with everything that the NBA is dealing with. Is that a turning point for the public to look at the behavior of corporate America and say, we don't want you to keep sort of cowing to these demands? Or is that not going to extend to Apple here? Because, look, as Goldman had previously pointed out, if Apple ever got banned in China, they would expect a 30% hit to earnings. So it's pretty obvious from a business point of view, they're going to do everything they can to keep people pleased over there.
It's a huge market for them, no doubt. Certainly the second most important market behind the U.S. And that's why over the years they have gone out of their way to accommodate and abide by the laws in Beijing. The difference here really is that this is happening both with the trade issue in the background and with the NBA issue as well. And I think the one thing that the NBA issue has highlighted and that Apple is subject a little bit to is that domestically the NBA was very progressive, very supportive of free speech, and that's what's caused such a challenge for them, is kind of that balance between U.S. viewpoints and Chinese viewpoints. And Apple is similar in that regard. We've seen them be very outspoken on issues in the U.S., and human rights issues have been a real pushing point of Tim Cook. So that's certainly one of the issues that's going to come into play here as well.
And Ed, which group does Apple most have to be afraid of running afoul with? I'm really paying attention to what's going on here with the Activision Blizzard story, where the gamers are really kind of the group at the forefront of pushing for these in favor of these Hong Kong protesters, and really trying to make that a center of activity in this country that try to like push and influence companies to behave in a certain way. Is there a group like that Apple has to worry about getting on the wrong side of with some of these moves here, or do you think that the public is largely going to ignore it?
No, I think that's exactly the right question. I think with what's happening with the NBA and with the Activision, as you mentioned, with the esports thing, the thing that's different here is that the sphere of influence that China sort of kind of expanding into is these are actions that have taken outside of Chinese borders, right? So when we're talking about supporting democracy in Hong Kong, that, and it was also a tweet. Twitter's not even available in China. So the fact that China was able to sort of kind of muscle in on actions outside of its own borders is what's interesting and different here. And I think to your question about what group that Apple has to be concerned about, it's going to be more if you see Tim Cook. He won't do this probably, but maybe an Apple employee says something on Twitter, and all of a sudden that becomes an issue for Beijing, and now you can't buy iPhones in China. I mean, that's an extreme hypothetical, but that is the difference between Apple complying with Beijing's demands within its own sort of where its laws reside versus things that happen outside of China. I think that's the big kind of question mark as to how things might be changing going forward.
Yeah, we've got to leave it there, guys. Tripp, apologies. Such a complicated issue. I know we could spend more time on it, but I'm sure we will. Thank you both for joining me today. Tripp Mickle from the Wall Street Journal, Ed Lee from The Times. Coming up, shares of this retailer soaring today. We'll tell you why investors are so excited. Plus, PG&E's unprecedented and deliberate power outage, leaving hundreds of thousands of customers in the dark. We have a live report from the ground ahead. The exchange is back in 2.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want documentaries, I got ones about space, sharks, or superstars. Horrors, no problem. It's not real, it's not real, it's not real. Or how about dramas? I've got Emmy-winning shows. Ooh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto-renew, terms apply.
Watford, it's chilly outside, and you're staying in with your feet up, and they can stay up. Because with Hive Active Heating, you can set the perfect temperature without even lifting a finger.
Alexa, ask Hive to boost my heating.
And by never having to heat an empty home, you could save up to £120 a year on your heating bill.
Alexa, play my nice and toasty playlist.
Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want football, how about the Premier League? Documentaries, I got ones about space, sharks, or superstars. Or how about dramas? I've got Emmy-winning shows. Ooh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto-renew, terms apply.
The Peugeot Professional Van range is the beating heart of businesses across the UK. Whether you're on the road with only your DAB radio for company or navigating tight spots with rear parking sensors, all Peugeot Professional Vans give your business that edge. Visit your local Peugeot dealership during our October van event from the 10th to the 31st of October and drive away with an exclusive finance offer. Master the impossible. Peugeot Motor Company PLC is acting as a credit broker, not a lender. Finance subject to status. Terms and conditions apply. Business users and over 18s only. Guarantee may be required. PSA Finance UK Limited.
Welcome back to the exchange. Stocks are still rallying this afternoon, but we've come a bit off the highs. The Dow's up 150 points, pretty consistent 0.5% gains as trade talks continue in Washington. Let's check in with Bob Bassani, who has more on all this action for us at the New York Stock Exchange. Bob?
And Kelly, today's rally really happened right after the open here when the president tweeted he would be meeting with the head of the Chinese delegation tomorrow at the White House, which contradicted, by the way, earlier reports that the Chinese officials may leave a day earlier. We're still trying to figure that out. But you see that rally there earlier in the day. Regardless here, I think the bar is very low right now. And that's the important thing. The market seems content with a mini deal of sorts or a truce for the moment here. That might involve buying agricultural products in exchange for no tariffs coming into effect next week. And that would be seen, I think, as a win here. Would it get us through Christmas? That's the question I asked Art Cashin, and frankly, he said he didn't know. But it may well be enough to keep us in the roughly 200-point trading range we've been in for most of the year. You see that 200-point range, that's 28.25 to about 30.25. The problem is, as everybody now knows, truces can be easily broken. That's what makes these rallies very, very tentative. It doesn't change, though, the fundamental narrative, guys, that's been developing for 2020. That is generally lower growth, even without a recession. 1 to 2% GDP growth, perhaps. Rates flat to lower. Defensive stocks like consumer staples as the leaders. And earnings guidance flat to lower. Tyler, back to you.
I'll pick it up, Bob. Thanks very much. Bob Bassani at the New York Stock Exchange. Let's flip over to Sue Herrera now for a CNBC News update. Sue?
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. In Liverpool, Irish Prime Minister Leo Varadkar says that his meeting with British Prime Minister Boris Johnson was very positive and very promising.
I am now absolutely convinced that both Ireland and Britain want there to be an agreement. That's in the interests of Ireland and the United Kingdom and the European Union as a whole. And I do see a pathway towards an agreement in the coming weeks.
The alleged gunman in the synagogue shooting attack in Germany appearing in court. Stephen Balliet was arrested after he allegedly tried to storm the synagogue. He is alleged to have shot 2 people outside of the building. He is accused of 2 counts of murder and 9 counts of attempted murder. And First Lady Melania Trump sitting down with students to discuss the dangers of vaping on Wednesday and the impact it is causing. She was joined by Health and Human Services Secretary Alex Azar and White House Senior Counselor Kellyanne Conway. You are up to date, Kel. That's the news update this hour. Back to you.
All right, Sue, thank you very much, Sue Herrera. Here's what else is coming up on the exchange.
Ahead, Bed Bath & booming. Problems are stopping WeWork from expanding overseas. Guess what? Facebook owns Instagram. And believe it or not, most Americans don't know that. And the digital consolidation game that's giving a boost to some old school stocks. It's all coming up on The Exchange.
It's been reported. The Peugeot Professional van range is the beating heart of businesses across the UK. Whether you're on the road with only your DAB radio for company or navigating tight spots with rear parking sensors, all Peugeot Professional vans give your business that edge. Visit your local Peugeot dealership during our October van event from the 10th to the 31st of October and drive away with an exclusive finance offer. Master the impossible. Peugeot Motor Company PLC is acting as a credit broker, not a lender. Finance subject to status. Terms and conditions apply. Business users and over 18s only. Guarantee may be required. PSA Finance UK Limited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Thrillers, they're going to be on the edge of their seats with these. Or how about horrors? No problem. It's not real, it's not real, it's not real. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto renew, terms apply.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want movies, I've got blockbusters. Football, how about the Premier League? Or how about crime dramas? I've got loads, and they're never going to guess who did it. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto renew, terms apply.
The chance of being hurt while using a leaf blower is about 3,000 to 1. Oh, unlucky. Never mind, at Curry's PC World, there's a 1 in 10 chance to get half your money back on all 2019 LG OLED TVs. Like the LG C9, described by Which as simply the best. Get blown away with Apple AirPlay, Google Assistant and Amazon Alexa built in. And there's up to £500 off. So the question is, are you feeling lucky? At Curry's PC World. T's and C's apply. GB16 plus. See currys.co.uk.
When he says the Fed funds rate is too high for no real reason. Remember a year ago, the Fed tightened aggressively to get out ahead of potential inflation. They should do the same thing right now to get out ahead of potential slowdown.
Welcome back. Let's catch you up on a couple stories that should be on your radar today. It is time for Rapid Fire. And here to break down the headlines are Seema Modi, Bill Griffith, and Leslie Picker. Welcome, everybody. First one, you know where we're going with this. It is Bed Bath & Beyond. The shares have soared today. They're up about 20% right now. All of this after tapping a new president and CEO, bringing in the big guns, Courtney Reagan from the New York Stock Exchange. Because, Courtney, I mean, yes, there's a huge short interest in this company, but you got to feel pretty good if you're the new hire, right?
Yeah, I mean, I think huge is an understatement, Kelly. 53% of these shares are held short. So we do have a pop. It was kind of expected because of that. But you're right. Mark Tritton is someone that I think investors should be and are happy about. Of course, we know that there's a trio of activists that have been involved in Bed Bath & Beyond for some time, pushing for some change here. And I've been able to speak with a number of sources familiar with the activist thinking, and they're all really excited about this appointment. One source told me it's not just a name that they like, they love having this man for the job. He's someone that came from Target. He was the chief merchant at Target. And if you think about it, over the last 3 years since he's been there, merchandise has really been reinvigorated for Target. I mean, that's sort of been a key part of what the company has done really well under him. Not only creating new private label brands, but also reinvigorating old ones, and a lot of them sort of in the home sector. And I was able to get in touch with one of the activists directly, Chris Kuiper with Legion Asset Management, and he says, look, Mark Tritton is a superstar. We are so excited that he is joining Bed Bath & Beyond. We believe Mark Tritton has the skills to return Bed Bath & Beyond to greatness.
I mean, even the most skilled person on the planet faces a challenge with Bed Bath, guys. But look, also Target's performance this year, it's up 67%.
You know, he's got his work cut out for him, clearly. This was an $80 stock a few years ago. It's now a $10, $12 stock. But Bed Bath & Beyond has still, even despite its problems, a clear brand. and a following there. It just got tired. They just need a reset in both brick and mortar and online. And I think this, reading what he's done in the past, not just at Target, but before that at some of the other companies he worked, he sounds like the right guy for
And I wonder what we might expect then that to look like in practice here, more of the buy online, pick up in store kind of concept, some fresh merchandising.
A lot of analysts were saying
partnerships.
that we will be able to improve the in-store experience at Bed Bath & Beyond, which, I mean,
maze.
anecdotally speaking, when you go there, it's always like a big stress factor for me, right? So if there's a way they can make it more efficient and more user-friendly, I think there could be really something there. But at the same time, what does this mean for Target, Courtney? I mean, they just lost one of their star players.
That's a good point.
Yeah, that's a really good point, Seema. I mean, he really was a star, and obviously, like we've just talked about, has sort of brought in all of these new private labels, building them in many cases from the ground up. So Target has basically put two other individuals that were currently on their team sort of to fill these shoes. The good news is, of course, we know that they set holiday way in advance. So while it seems like a really crummy time to lose your chief merchant, luckily a lot of that is locked and loaded. But I do think you're right. I think it is a loss for Target as it's a gain for Bed Bath & Beyond. But the job is a big one. He has a lot cut out for him. He does have a lot of experience, but he has never been a CEO. When he started at Target, he was tired. You may remember 3 years ago, a lot of people just thought, maybe Target was on the downward slide. So he has been at least part of a turnaround, although not quite as a dire situation as what he might be walking into Bed Bath & Beyond. But look, a lot of the activists say there's a lot of low-hanging fruit here, and so there's a lot of things that could be fixed pretty easily to begin to move that stock price higher.
This one has possibilities here. Certainly better than if you tried to turn Toys R Us around or something.
Well, let's hope.
With all the debt. Yeah. I mean, that's not their problem. The problem is just
right, absolutely.
The merchandising and things.
And the refresh that they need.
Yeah,
Courtney,
exactly.
thanks. Appreciate it.
Thanks.
Ms. Reagan. Next, we go to WeWork, whose push to go public may be dead for now, but the We company is full speed ahead with some plans to build out in Southeast Asia, even as they're cutting back the workforce and slowing expansion plans in China. They're opening some new offices in Singapore and Manila. The company also, Leslie, reportedly is seeking up to $1 billion lifeline from SoftBank here.
Right. So their whole survival depends on some kind of expansion. Now, the problem is, of course, and we've talked about this numerous times, is the cash burn that they're facing, which is where SoftBank comes in to try and plug the hole, at least momentarily. What's interesting to me about this is the fact that they're pulling back on their expansion plans in China. So they must see less of an opportunity in China and more of an opportunity in Singapore and Manila. I don't know if that's a factor of cost, if that's a factor of potential revenue, but it's interesting to see, especially now that they have to be a lot pickier about where exactly they expand, where they choose to expand, and what that says, for other companies that are looking to kind of expand in that region.
Why were they losing so much money? Was it they weren't charging enough membership fees? I mean, just didn't have any profit margins relative to what they were paying for the leases? Yeah, I mean, $45 a month.
Right.
You could charge more than that, I would think.
It's more.
These small business people could afford more than that, I'd think.
The expense was largely related to their expansion plans, and people who I spoke with close to the company said that they could always ratchet that back in order to save money in the long term. Now, the trouble is you never know exactly when to ratchet that back. It could be too late. These things take, months and months to actually come together. So the biggest issue for them was largely related to expansion, but it was also the biggest opportunity for them, which is why they kept doing it, which is why their backers like SoftBank allowed them to continue doing it. And then, of course, there is the mismatch in terms of the longer leases that they take out versus the short-term rentals that they dole out to people at companies, startups, and so forth.
Bottom line, it seems to be, do they get if they need the $1 billion, presumably SoftBank's got to give it to them. What choice do they have?
Right.
Exactly.
They're in for $10 billion already, so what's another billion among friends?
Well, it's a moral hazard situation, right? If you are SoftBank, you're in this thing to the tune of $11 billion. Yeah. So if it takes $1 billion to keep it afloat and preserve your $11 billion of capital that you've invested, here you are. Here are the money bags.
Oh, and maybe some layoffs and whatever else too might be coming there. Let's talk about something else, shall we? A new survey out from Pew Research shows Americans' digital knowledge leaves quite a lot to be desired. Only 29% of survey takers knew that Instagram and WhatsApp are owned by Facebook. And by the way, when shown a picture of Twitter founder and CEO Jack Dorsey, only 15% of respondents knew who he was. Now, more salient is the Facebook piece of this, obviously.
I understand, but let's think about this. We all know how to drive a car. Do we all know how it works? Could we name all the parts of the car? Do we know who the CEO of Fiat Chrysler is just on the drop of a hat? I mean, it's the same thing.
So it's different. No, it's different because the type of information that your phone now has about you, especially with Facebook, WhatsApp, banking accounts, is much different than the type of information your car has.
Why should I care whether
so I should know how that
Facebook
information is being used.
Why should I care whether Facebook owns WhatsApp or Instagram or what Jack Dorsey looks like? I mean, those are just some of the questions.
I think it comes back to privacy.
You should
and the
know
data.
about the security issues. You should know about phishing. I agree. But some of these questions were.
And by the way, so everyone knows what this was. This was 10 questions from the Pew survey. Pew Center that they put to everybody. Only 20% of adults answered 7 or more of them correctly. Just 2% got all 10 questions correct. I think there's a big regulatory issue here. So if people don't know that Instagram and WhatsApp are owned by Facebook, could see some interesting DC pushback to that, where they're going to want to say, well, wait a minute, you need to know that the real corporate overlord here is Facebook. Well, to your point, Bill, 59% of people knew that advertising was the largest source of revenue for most social media sites, which is pretty encouraging. Now, do they know the exact nature of that? Okay, it comes from digital micro-targeting or whatever, but at least there's a sense of we understand the fundamental contract we're entering when we use these free services is they're advertising and making money that way off of us.
And I think to your point on the regulatory side, you know, we're looking at a situation in the next couple of years where big tech is supposed to be regulated. Well, if their constituents don't really know or seemingly may not even care what happens to their data and what happens to their footprint online, then how are we supposed to expect the regulators to actually take action in response to that as well? I think that is a key takeaway from this Pew study, the fact that the constituency, most
not going to
Americans
be a groundswell to
aren't that worried
Instagram
about it.
from
Don't really know what's going on.
When the politicians go home to their town hall meetings, are they hearing from their constituents saying, you've got to break up Facebook? I don't think so.
I think this presents a big opportunity for the U.S. education system, for universities. Just implement a digital literacy class, especially as mobile penetration rises. There needs to be more knowledge on how to use your devices and where the information goes.
There's a lot of literacy, financial
the fact
literacy,
that my mom
digital literacy.
asks me what cookies are, I mean,
but
there's an opportunity.
Yeah, well, people did pretty well on that question, surprisingly. Before we go, speaking of college, one of the most dreaded parts of applying to college getting a lot less popular, not just with high school test takers. Over the past year, a record 41 colleges and universities have gotten rid of the requirement that people take the SAT or the ACT standardized test. Now, this is an inequality story. People say they favor higher income students whose parents can afford tutoring and are more likely to apply for extra time to take the test, which you have to know about. Everyone seems to be doing that these days. I also think there's a fallout here from the college scandal to some extent that kind of has, taken the authority out of when these tests are so easily manipulated by people who are spending the money to fake the proctors and everything else.
They're not standardized.
Time for change.
Yeah. If you can cheat the system, then it's not actually a standardized test at the end of the day.
I'm just not sure if it's going to change the status quo. And I mean, what do you guys think? If there's other ways for people to signal, hey, can you afford a bunch of extracurriculars if your parents don't have dough? I don't know. I mean, there's always going to be built-in, quote-unquote, inequality.
The testing system has always been flawed anyway. Everybody's high school education is not equal.
Nope.
But yet the test is standardized, and you got to know a certain amount. But some students are going to know more because that's what they were taught. I have long had a problem that a lot of the kids these days aren't getting an education; they're just getting test prep.
Yeah, that's how I feel. Personally.
So that's got to change. So I find it somewhat interesting and a bit encouraging that the schools are not emphasizing the tests as much. They're making it test optional.
They're considering it, right, as one of many factors that they will use to determine whether they're going to let you into their university.
And that, I think, personalizes the vetting process for the university. They're just pushing buttons when they look to see what the number was on the SAT score, and do we want that or not? We got certain parameters, and if you meet that parameter, you're in. If you don't, you're out. But they don't take into consideration who that individual is.
I think I think those changes are going to be years in the making. This is the tip of the iceberg.
Absolutely. You're not going to do this overnight, but I think it's encouraging and a good step.
All right. Guess we all agree. Thank you guys, Seema Modi, Bill Griffith, Leslie Picker. We're living in a digital age, but shares of traditional media companies like the New York Times are surging lately, and it's thanks to Google and Facebook. We have those details for you right after this.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Watford, it's chilly outside, and you're staying in with your feet up, and they can stay up. Because with Hive Active Heating, you can set the perfect temperature without even lifting a finger.
Alexa, ask Hive to boost my heating.
And by never having to heat an empty home, you could save up to £120 a year on your heating bill.
Alexa, play my Nice and Toasty playlist.
Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want movies, I've got blockbusters. Football, how about the Premier League? Or how about crime dramas? I've got loads, and they're never going to guess who did it. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus month passes auto renew, terms apply.
Welcome back. There have been 3 digital media deals in the past 3 weeks as outlets work to take on Facebook and Google. Julia Borston joins us now with what this merger mania is revealing about how this space is changing, Julia.
Well, Kelly, these 3 companies are consolidating in part to have greater scale to better compete with Facebook and Google. Now, all 3 of these are all-stock deals. Discovery-backed Group 9 bought Pop Sugar, Vice bought Refinery 29, and Vox bought New York Magazine. Now, these digital media companies are going up against Facebook and Google, which together dominate 60% of all digital advertising revenue in the U.S., according to eMarketer. Now, while those digital behemoths have also hurt traditional publishers over the past several decades, after years of declining ads and subscriptions, now the New York Times, Gannett, and News Corp stocks are turning around. All 3 are up by double-digit percentages this year as their digital businesses start to kick in. And now Facebook and Google are actually taking steps to help them. Facebook is negotiating to pay publishers to license their content in its coming News tab, while Google's new algorithm highlights original reporting. Kelly?
Yeah, who would have thought they might be doing some help here? Julia, stay right there for more. We're also joined by Alex Sherman, who is a tech reporter for CNBC.com. Alex, these deals gained a lot of buzz, should I say, because of the valuations and whether they're realistic and what it tells us about how the digital media world has really, what phrase do I use? Is it collapsed? Is it just consolidating? I mean, this is not the landscape from 10 years ago when everyone was pouring money into these websites.
Certainly hit a breaking point, I think, or maybe a broader realization that the exit may not be there for all of these firms. I mean, even the digital media firms, Vice and BuzzFeed, that have toyed with going public, have reached the conclusion that there's no appetite for them to go public. They're not in a financial position where investors really believe in the long-term growth of these companies.
What happened? So we know they were extremely successful, like I said, maybe about 10 years ago. And then a couple of years ago, you started hearing about the need to pivot to video, so to speak. So there must have been a recognition on the inside that traffic trends are changing, user behavior is changing. Well, what's the difference?
Well, some of it was what Julia just referenced, which was that Facebook made a change to its algorithm that dramatically lowered traffic and eyeballs and therefore ad revenue that were associated with a number of these different sites. In addition to that, I think people realized that simply advertising alone wasn't going to get them there. So what we've seen over the past couple of years is many of these sites have transitioned to a paywall where they're at least getting subscription revenue in addition to the advertising revenue. And so the whole model is now different, and the value proposition along with that business model has changed.
It's very different. So Julie, also curious what you would make of it, because you have, again, these sites that came on in a big way and now are kind of floundering, while the traditional, the old schools, the Wall Street Journals of the world are doing much better and do have that paywall and now even have the help of Facebook and Google, I guess. But why aren't Facebook and Google benefiting the other digital media players more?
Well, I think the key thing here is that Facebook and Google are under all this regulatory scrutiny, and one thing they've really been criticized for is really stealing advertising dollars from the New York Times and the Washington Post of the world, simply because there are so many news sites out there that just aggregate, that pull headlines, that copy what those original sort of journalistic outlets are doing, that there's been this push now for the Facebooks and Googles of the world to take a step back and to make sure that they're not going to get criticized and really more regulatory scrutiny about this from Capitol Hill. So what we've seen recently is now Facebook is in the process of putting together a news tab. They want to license content. They want to make sure they drive people back to the news outlets to subscribe there. We haven't seen exactly what that'll look like yet, but that is in process.
Yeah.
And then Google has been doing this thing to try to sort of feature original reporting, because I think they know this is something they're going to be criticized for even more. And we need some journalists out there to keep doing the original reporting that everyone else is going to copy.
We got to go, Alex. Quick last word.
I think one other thing to point out about what's different, what changed about 2 years ago, 3 years ago, Donald Trump was elected, and that really helped some of the traditional news organizations
Gave them their mojo back.
And we'll have to see if Trump is not reelected, if these companies actually have a post-Trump strategy.
Right. So when Trump takes up all the action, when not, we can all take quizzes about what job we're gonna have in 20 years or whatever, made up the content of the sites. Thank you guys, appreciate it. Alex Sherman, Julia Borston. Let's get a news alert. Meg Terrell joins us with some news from the CDC. Meg, what's happening?
Hey, Kelly, well, the CDC is updating on the numbers of the lung illnesses associated with vaping. They are now up to 1,299 and 26 deaths across 21 states. Now, that's up from about 1,080 last week and 18 deaths. So this continues to grow. The CDC saying that essentially the same breakdown of what people used. Most used a THC vaping product, though some did exclusively report using nicotine-containing products. Still no information about the exact thing that is causing these lung injuries, but the numbers continue to grow. Kelly, back over to you.
1,300 affected, 26 deaths. Meg, wow. I appreciate you joining us with that, Meg Terrell, with the very latest. Meantime, power company PG&E creating mandatory blackouts for millions of people in California in an attempt to avoid another round of devastating wildfires. We're going to get you the latest on the ground and the fallout from this move next.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram for the latest and greatest audio happenings across the app. Explore exclusive content.
It's called Indie.
Learn about the hottest new podcasts.
The Nostalgia Mixtape, a new podcast hosted by yours truly, Savannah Shroud.
And get alerted when the big game's about to begin.
This Sunday is Championship Sunday, when we'll find out which two teams are going to play for the Lombardi Trophy.
Add TuneIn to your feed and be in the know when it matters most.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run!
...single...
And gone!
...game.
And that gone, a home run!
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit...
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone!
Upgrade today.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
The Better Network is now on TuneIn. This is Brent Musburger.
Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
These are the top stories everyone's talking about on TuneIn.
Maroon 5 records a theme song for Cat Week.
Cat Week's here, Mr. John. Meow, meow, meow. Come on. When I say me, you say ah. Me, ow, me. Meow, meow, meow.
Wendy Williams lashes out after an audience member's cell phone goes off.
Somebody's phone on? Yeah. Get out. Get out. Turn that phone off now. I was being overdramatic, but kindly please turn your phone off.
Comedian Jeff Dunham and his peanut puppet on The Kelly Clarkson Show.
It's been, 17 years now?
17 years.
17 years, oh my gosh, it was so great. And then you're standing there and you're won and everyone's crying and the confetti's coming down. And just, he's pretending that he didn't care that he lost.
Why don't you search TuneIn to find all the latest for yourself?
Millions of people in California are experiencing a blackout as PG&E shuts down power to temper wildfire risks after last year's devastation. Josh Lipton is live in Berkeley, California with the latest for us. Josh?
So, Kelly, we're here in Berkeley, California, Berkeley Hills specifically, where residents don't have power. I actually caught up with a long-time resident of this neighborhood who said he was ready. He had stocked up on provisions with his wife, and he, interestingly, wasn't angry at PG&E, Kelly. He said, listen, in his opinion, utility was doing what it had to keep people safe. But, of course, listen, there are plenty of Californians who are upset with the utility as it now takes this decision to shut down power to hundreds of thousands of California customers. 34 of 58 counties across the state are expected to be impacted. The worry is that these high winds and the dry weather, that could damage infrastructure and lead to wildfires. The outages, we know, they've already resulted in runs on supplies like batteries, coolers, flashlights. The utility is saying it could take 5 days or longer to completely restore power. The potential economic cost of all this, $2.5 billion. And all this is coming in a tough time for PG&E and its bankruptcy case. A judge there now opening the door to a rival bankruptcy plan, and the stock cratering in today's trade on that headline. Guys, back to you.
Yeah, they have a lot of work to do, Josh, obviously, and they can only hope today helps a little bit with the risks this time around. Josh Lipton is in Berkeley for us. Josh, thanks. And watch out, Silicon Valley. The Midwest is coming for your venture capital. We're going to talk to the co-founder of a scout fund for coastal VCs to invest in, companies that he says actually provide economic value. The Exchange will be right back.
For farmers here.
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want documentaries, I got ones about space, sharks, or superstars, or crime dramas. I've got loads. And they're never going to guess who did it. Or how about sports? These games are unmissable. Get in. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want movies, I've got blockbusters. Football, how about the Premier League? Or how about crime dramas? I've got loads, and they're never going to guess who did it. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
You're a small business owner and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions, like computers with Intel Core processors, servers, storage and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
Welcome back. Silicon Valley is the seat of venture capital in America, but in the wake of several high-profile IPO flops this year, that startup culture is earning plenty of critics. Should investors look elsewhere? My next guest thinks so, and he's leading a VC firm that pushes funding to the Midwest. With me now is Scott Shane, the managing director of Comeback Capital. Scott, it's good to see you. Welcome.
Thank you. Thanks for having me.
I like how you say you're investing in real companies, so to speak. We're talking about machinery, robotics. Tell us what kinds of companies you're seeing.
Exactly. So, a good anecdote that explains this is in San Francisco, probably people who weld would only be artists, right? But we've got companies that are using robotics to weld in the Midwest.
And does that lead to good investments? Is there enough scale? I mean, when we're talking about how Facebook